Hello and welcome. Yesterday, the European currency managed to stay firm at local lows, albeit data on business climate, current assessment and expectations from Germany's IFO Economic Research Institute allowed traders to protect lows around the level of 1.1290. Besides, its tensions between Ukraine and Russia led to increased demand for risky assets. As a result, the euro advanced, however, after market participants began to lock in profits and the United States reported weak data on consumer confidence, the currency declined slightly. Today's macroeconomic calendar is full of important releases. The GfK Institute is set to publish its consumer sentiment index for Germany, but this report will hardly have a severe impact on the dynamics of the votes. European Central Bank Board member Frank Alderson will deliver a speech today. Besides, traders may take notice of data on consumer prices in the euro area. The inflation rate is expected to be up by 5.1% from the year earlier. If the indicator exceeds analysts' expectations, the ECB will probably have to consider monetary policy tightening again. Notably, last year, ECB President Christine Lagarde spoke of the need to take more aggressive measures and suggested possible interest rate hikes in 2022. However, after the first meeting of the central bank this year, she noted that there is no need to hurry up. So, if Eurozone inflation rises in January, the euro will have every chance of gaining value. At the same time, it's worth taking into account the Russia-Ukraine conflict. Any statements on views on this issue may exert strong pressure on the European currency. Therefore, one should be careful with long positions at current levels. As for Britain, particular attention should be paid to a British parliamentary hearing and Bank of England Governor Andrew Bailey's speech. The policy of the British regulator is tighter than that one of the ECB. However, recent data on ease inflation could affect its view regarding monetary policy tightening in the UK. Therefore, if Bailey's speech creates a cautiously optimistic outlook for Britain's economy, the pound sterling is unlikely to gain strong upside momentum in the near future. From a technical point of view, the level of 1.1338 acts as resistance. If the price breaks through and consolidates about this level, a strong buy signal will be created. In this case, the euro will most likely rise above 1.1366 and probably return to 1.1395. A false breakout at 1.1338 and 1.1366 will enable traders to open short positions. In this situation, the euro is expected to break through and fix below 1.1312 and then slide to 1.1289 and 1.1262. At the level of 1.1262, it will be possible to go long, open long position on the rebound with a view to catching an intraday correction of 15-20 pips. Long positions at 1.1312 and 1.1289 can be considered only in the event of a false breakout. Speaking of the British pound, intraday volatility seems to be pretty low. If Bailey's statement comes as no surprise to market participants, a false breakout at 1.3603 will create a sell signal. In this case, the pound sterling will most likely return to 1.3568 and 1.3509. At the level of 1.3509, traders will be able to go long on the rebound, counting on an intraday correction of 10-15 pips. Long positions at 1.3568 can be considered only amid a false breakout. However, new lows at 1.3521 and 1.3505 will be more appropriate for purchases. If the price overcomes and consolidates about 1.3603, the British pound will have a chance of approaching 1.3637 and then reaching 1.3659 and 1.3683. At these two levels, it will be possible to go short on the rebound, hoping for an intraday correction of 15-20 pips.